Welcome to the Daily Block, the top events from the past day in crypto and why they actually matter for traders and degenerates. Fast, snarky, and slightly more useful than your uncle's moonbag theory. Bitcoin and Ethereum spot. ETFs sucked in 939 million in one day. US spot. Bitcoin ETFs pulled in 627 million and Ether ETFs hauled in 312 million. The biggest single-day ETF inflow since late August and the fourth straight day of positive flows. Big issuers like BlackRock and Fidelity again captured the lion's share, which means the money isn't trickling in. It's being funneled into a few massive buckets. That kind of concentrated, steady buying into spot products can pump price and drain exchange liquidity fast. Why it matters for crypto investing. EF inflows are real institutional demand that can move prices quickly, shrink available sell liquidity, and accelerate short squeezes and breakouts. Risk counterpoint. One big day doesn't guarantee a sustained trend. Flows can reverse, and headline-driven rotations can produce nasty whipsaws. Next up, BlackRock's IBIT has turned into a $24 billion flywheel. BlackRock's iShares Bitcoin Trust has amassed roughly $24 billion year-to-date, and their tokenized T-bill product, BTC, exploded about 800% in the last 18 months. Analysts say IBIT inflows are regularly larger than new BTC issuance now, concentrating depth during U.S. trading hours and changing where liquidity sits on the tape. When a single ETF soaks up supply, market microstructure shifts. Price reacts more to flow prints than to old-school on-chain fundamentals. Why it matters for crypto investing. A dominant ETF changes intraday order book behavior, making U.S. hours and ETF flow times the obvious windows for big moves and squeezes. Risk at counterpoint. Concentration creates fragility. If IBIT gets a bad day or redemption wave, the same flywheel can spin the other way and amplify selling. OnePay, the Walmart-backed app, is adding Bitcoin and Ether trading via zero hash. OnePay, majority owned by Walmart, will add BTC and ETH trading and custody through zero hash, letting users convert crypto to cash and use it in-app. The app already sits high on download charts and has immediate access to Walmart's gigantic customer base, so even small conversion rates mean lots of new retail on-ramps. Imagine millions of Walmart shoppers able to buy fractions of Bitcoin in a checkout flow. Distribution and on-ramp liquidity get a major upgrade. Why it matters for crypto investing. A Walmart OnePay rollout could channel sustained retail flows and increase steady demand, especially for micro buys and dollar cost averaging from non-crypto natives. Risk counterpoint. Retail distribution raises adoption, but also brings fickle buyers who sell into volatility, increasing both volume and chop. Standard Chartered and others are raising Bitcoin targets. 135,000 and beyond Standard Chartered put a 135,000 price on Bitcoin as a plausible near-term target, while Citi and JP Morgan nudged multi-month targets higher. Citi's 12-month base sits around 181,000. The banks cite ETF demand, macro tailwinds, and a lower-for-longer rate backdrop as catalysts for upside. These price calls don't create demand by themselves. They do influence allocation committees and PM desks that still follow sell-side signals. Why it matters for crypto investing. Bullish Wall Street forecasts can tilt institutional allocations and amplify momentum trades, feeding into the ETF flow loop and gamma squeezes. Risk or counterpoint. Big bank targets are models, not guarantees. If macro data surprises or rates reprice, those optimistic forecasts can flip into headline fodder for sellers. Solana ETF and staking filings plus rumors are powering Sol up about 19%. Several asset managers have revised S1s and filings for U.S. Solana spot staking EFs, and chatter about product approvals has investors front-running the runway. Sewell ripped roughly 19% this week as speculative money piled into the rumor trade, but on-chain metrics show long-term holders are taking profits into the rally. That leaves Sol as a classic event-driven alt. Huge upside if a staking ETF gets greenlit. Brutal retrace if regulators or issuers sour. Why it matters for crypto investing. ETFs staking optics can turbo alt-child rallies with institutional flow. If approved, expect big new bids. If denied, expect fast unwind. Risk counterpoint. Heavy long-term holder selling into rallies means the upside could be limited and volatility could spike when the rumor phase ends. BNB just printed a new all-time high at about 1,111. Alt season signal. BNB smashed through 1,111 to a fresh ATH, fueled by buying pressure and a cascade of short liquidations inside Binance's ecosystem. Analysts point to ecosystem activity and possible rotation dollars moving from blue-chip coins into large-cap alts. When a major exchange token leads with new highs, It often signals pockets of risk-on sentiment, and traders start sniffing for breakout setups across the altcoin space. Why it matters for crypto investing. Large-cap alts making new highs can presage broader rotations into risk assets, offering setups to hunt breakout moves or to hedge by trimming into strength. Risk counterpoint. Quick ETHs invite fast mean reversion and profit-taking. Using leverage here without a plan is a one-way ticket to sadness. Sharp's technology doubled down on Solana, about $448 million in Sol, and a $100 million buyback. Sharp's technology, a NASDAQ-listed company, disclosed roughly 2 million Sol in its treasury, roughly $448 million, and launched a $100 million stock buyback program. That's corporate treasuries putting real skin into crypto exposure and using buybacks to juice the equity while holding the underlying token. These corporate balance sheet plays act as stealth demand, removing supply from the market and providing a potential price floor that isn't just hype. Why it matters for crypto investing. Corporate treasuries and buybacks create non-speculative demand that can stabilize prices and reduce circulating supply, making downside less brutal in some scenarios. Risk counterpoint. Corporate concentration also introduces single-entity risk. If their financial position changes or they dump, markets can get ugly fast. Hyperliquid's top trader opened a roughly 316,000 hype short amid a pump. Sketchy setup. A high-profile trader on Hyperliquid put on a roughly 316,000 hype short while the token was pumping, and position metrics, liquidation price, and leverage look weird enough to raise eyebrows. That kind of aggressive contraposition against a momentum move can be either a brilliant fade or a self-owning squeeze recipe, especially on small-cap tokens with shallow order books. On tiny tokens, one dramatic short can light a fuse and produce violent, fast short squeezes that blow up leveraged bets. Why it matters for crypto investing. Big shorts against pumps are setups for extreme intraday volatility and potential squeezes. Watching liquidation clusters and order book depth is essential. Risk counterpoint. On small markets, oddball positions sometimes reflect reporting anomalies or OTC trades. Don't assume every headline reveals a tradable conspiracy. That's it for the top 8 moves that short-term traders and degens should care about today. If you like the speed and the edge, hit subscribe so we can keep delivering this mix of snark and actual market sense every day. That's Today in Crypto, where the gains are imaginary and the pain is real.